Yo, what's up, everybody? Friday, November 21st. Nice rally today. So yesterday I was telling you guys that it looked like leading flows have stabilized. And when I looked at the data today, that still looks like it is the case. So that's good in the short term. I think we'll see a continuation of this bounce going into next week. Yesterday, I thought was the big monthly tariff drain, but there wasn't any. There was a 1.3 billion drain. That's not the big one, but that 1.3 billion tariff drain. That's about 3 times the normal daily drain. And that also happens, I've noticed that also happens around the same time every month, around the third week every month. So maybe today was that big tariff drain. I don't know. We'll see the data on Monday. The important thing that I want to mention, at least for the short-term outlook, now this is the short-term outlook, is that the leading flows, they have stabilized, okay? Not the net government transfers. Now, even though, I update my data every Friday, there was actually, I think, something like a 16 billion improvement in net government transfers. They went from like 103 billion negative to 87 billion negative, something like that. So there was like a 16 billion improvement, but that's not going to last. Because once we get the big monthly tariff drain, and maybe that happened today, I don't know. We'll see. But that's still contracting. All right. And I keep telling you this every single video that I make. You got to be aware of this because that's the water in the swimming pool coming down. All right. Yesterday I did, or the other day, I talked about the foreign sector. That's kicking in a little bit, but it's not enough to offset what we're seeing from the tariff drain. So that's still an issue. Now, Trump has reduced some of these tariffs recently because, the Republicans got trounced in the elections. And the issue for most Americans was affordability. So now he's cut back some of these tariffs. So we'll see maybe, you're talking about bananas, you're talking about coffee. I don't know if it's going to make that much of a difference, but we'll see. We'll see the numbers, all right? As it stands right now, I still say that the top is in for the market averages. The top is in for gold because of this decline in net government transfers. Again, that's the swimming pool water level coming down. 10-year yield got down to 405 today. I think it was maybe settled around 407, 408. I don't know. I didn't check it at the end. We were up, around 4, I think almost as high as 417 recently. I said that was a buy for treasuries. It's coming down. Now you have a situation here. It's just, I'm getting tired of even talking about it because it's maddening. It really is. And what I'm talking about is the Fed and this ridiculous on and one day on, one day off. We're not going to cut. We're going to cut. We're not, this very disjointed and contradictory communication. You got Powell, who is constantly hawkish, and other Fed members who are constantly hawkish, regardless of what the economic data shows, okay? They just stick to that view. And then you have other Fed members who come out and say, no, we're going to cut. You cannot, the market takes its direction largely from Fed communication. I mean, they follow up with a policy change, maybe a rate cut, a rate hike, whatever it is. But before they do that, they communicate that to the market, and the market moves in the direction of that communication. When you have this constant flip-flopping of communication, when you have contradictory voices coming out of the FOMC, all this is doing is injecting needless volatility. This is very bad management. If you had a company and you had a board of directors or you had senior executives, you know, the CEO saying one thing, the chief financial officer saying another thing, some other senior executives saying a different thing, I mean, the stock would be all over the map, and it would be a detriment to that company's, that firm's operations. And this is exactly what is going on with the Fed. And I've said this before, this is the worst managed Fed probably since Paul Volcker, who went crazy hiking up interest rates, raising the inflation rate to crazy levels, basically bankrupting American industry. That was the trigger, that was the event that began all of this offshoring. Crazy Volcker, who to this day, you know, in the realm of central bankers, to show you how messed up they are in their thinking, if they in their orthodoxy, in their belief system, they still think this guy was like the greatest central banker of all time. He was terrible. Now this communication, I keep saying this because as a guy myself who's been involved in the markets for over 40 years, like to see this kind of mismanagement, to see this kind of communication, this behavior on the part of people in charge who are supposed to know what they're doing. I hope this shows you that these people have, number one, they have no idea of what they're doing. They don't understand the economics behind their own policies, okay? They don't understand their own theories. They double down on things that result in the opposite of what they're trying to achieve. You have members who run the Fed that they're all coming out with different opinions. I mean, this is a ridiculous, absolutely insane way to operate, particularly since everybody, not me, but everybody, the whole entire financial world, players in the economy, firms, corporate treasurers, whatever, they all hang on every single word of the Fed and the direction of Fed policy. I mean, you have to understand, you have to look at this, and I don't care what your level of financial education or economic education, if you've been watching me for any length of time, you're probably pretty knowledgeable, you're probably pretty sophisticated, you understand the impact of Fed policy, you understand monetary policy and the true effect of what it does. I mean, to watch these guys and to listen to these guys, it's got to leave you scratching your head as to, like, where did they come from? What kind of an education, what kind of an economic education, what kind of an education in management, in public relations do these guys have? I mean, they should not be in this position. Now, unfortunately, I have no control over that. I think they should all be fired. The president can't even fire them. Not that he necessarily knows better. I know he wants lower interest rates. I think he understands that the rate set by the Fed sets the general price level of all goods and services. I think he does understand that. But I mean, I just watched this and it's infuriating to see this kind of flip-flopping and one guy saying one thing, somebody else saying another thing, then Powell every single time coming out after every Fed meeting in the press conference with a hawkish statement, a hawkish view, even though he was back in Jackson Hole in August saying, okay, now we're going to be looking at the labor market, which has clearly slowed down, but now it's not the labor market. I mean, it's just, this is why I always tell you guys, you got to ignore all this stuff. Let the others, flip-flop around on every statement, on every comment. I've been telling you guys, stay bullish on bonds. It is a long-term trade. Yes, it's been a little tedious. It's going in the right direction. You got to be patient. You have to be patient. Patience is one of the key behavioral characteristics if you're going to be successful. If you're looking to make quick money, like some of you here, you're like, oh, Mike, your information sucks. That's because these people who say that, I say such and such a thing is going to happen, and if it doesn't happen like the next day, then for them, the information is no good. I mean, when I see that, first of all, I know what kind of a person you are, okay? You don't have any interest in understanding. You don't have any self-control, emotional control. You're needy, okay? You want it, like right now. Those are childish characteristics. And I know this personally. I mean, I used to be that way a long time ago. I'm older now. You know, what they say, like, with age comes wisdom. I think I can at least point to that. So be patient. All right? The important thing is, well, not of major importance, but I think for this particular video that I made tonight, just going to repeat that it looks to me like the leading flows right now have stabilized. All right, which kind of means that the impact, and I said this yesterday, the negative impact from the government shutdown is abating, which is good. All right, so this rally will continue next week, but in the bigger picture, see, I always have to say this to you guys, because then you're going to say, you said this, and this happened. In the bigger picture are the net government transfers, and those are going down. All right, that's the level of the water in the swimming pool. You could still go swimming right now. You could still dive in. But as it gets lower, there's more risk in diving in because you could hit your head on the bottom of the pool. Anyway, that's it for tonight. I'm going to go grill up a steak for myself. I was at boxing tonight. Thank you for watching my video. Please give it a like and subscribe if you haven't already. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Have a nice weekend. Bye.